Hey, welcome back, everybody. John Caruso coming to you here. Today is Thursday, August 26th, with a quick look in on the market. We did see some volatility off the open after we learned of the terrorist attacks over in Afghanistan this morning. Market tried to recover, and it looks like we're headed back to test those lows here as we speak. We did see gold sell off initially back to about 1780, and then we did see a strong recovery rally where it actually popped its head north of 18 briefly. Really no movement in the Treasury market, which is a shock. You would have thought you would have seen that flight to safety move in Treasuries, but that still might happen here in over the course of the next couple of days. As right now I've got the interest rate market signaling a little bit overbought here in the very near term. We do think interest rates are set to move higher into the end of the year. But we might have one more shot on the downside in rates, another push higher in bonds that'll help you tighten your grip on that trade going into year end. So that's what we're thinking right now. Putting the geopolitical thing aside right now, everyone's talking about Jay Powell. He's due to speak tomorrow at 9 a.m. Central Time. Whether he's going to be hawkish, dovish, neutral, nobody really knows at the moment. But I have been noticing a pattern where the Fed parades out their non-voting members who are very, very hawkish. We did see that this morning with James Bullard and Richard Kaplan out of the Dallas Fed, where they came out very hawkish in terms of an accelerated pace to the taper. All that really matters is what Jay Powell says tomorrow. Jay Powell, in my opinion, is going to strike a more neutral tone tomorrow, neutral to dovish. I don't think he needs to show his hand just yet. A lot of this taper is labor market dependent, and I don't think he's going to get out in front of the labor number that's due out next Friday. So that's kind of my immediate term thoughts on Powell tomorrow. If that's the case, there's going to be there could be a small pocket or a window for another equity rally higher. You could see gold and silver start to improve higher following that. You might see a little bit of a retracement rally back up in Treasuries where yields start to come in if Powell is neutral to dovish. I think the yields market right now is trying to front run a hawkish Fed tomorrow. If Powell disappoints, then you could see interest rates start to come in again and Treasury bonds float higher. We do want to be positioned short bonds into the end of the year, but getting the timing right has been very difficult here. There's still a lot of unknowns in the market. There's unknowns around the virus. There's unknowns around the pace of the taper. Now you throw in some geopolitical issues into the mix as well, and you've got a little bit. You've got a quagmire of unknowns that we need to have sorted out here before we can have a more definitive path forward. So that's what I'm looking at right now. In terms going back to gold a little bit here, we did have a small allocation gold here this morning following the news that broke from Afghanistan. We did see gold rally to about 18. It has since backed off. We're about 1792 right now. My thoughts on gold here in the near term, as long as we hold 1760, we're in good shape to rally north of 1800. We will actually probably have a little more of a pessimistic view or approach to gold as we start to move into the fourth quarter and into year end. However, I do think there's a window here, a very brief window of maybe 1 to 2 weeks where you could see gold do much better here in the near term. So that's all I have for you right now. If you want to jump on our morning market insight letter, I'd be more than happy to push that out to you for a trial. Feel free to email me at jcaruso@rjofutures.com. We'll see you back here next time. Take care.